Welcome back to Self Invested. My name's Lemuel, and in this video, I'm joined by one of my favorite housing YouTubers, Payam, from the YouTube channel Niche Advice. And he's joining me to talk about the current mortgage market. And we're going to be looking at mortgage rates, what they look like currently, and comparing them to how they looked 6 weeks ago, just before the Bank of England announced the last rise in interest rates. And we're also going to be looking at recent changes in the mortgage market, such as the Bank of England's announcement that they're going to be withdrawing the stress test for mortgage lending criteria, which should hopefully make it easier for borrowers to get mortgages. And also the announcement that 6 of the UK's biggest lenders are going to be lending money against buildings affected by the cladding crisis, which should hopefully help people that have been affected by this crisis sell their homes and move on. But before we get into all of that, I just want to firstly welcome Payam to the channel. Welcome, Payam. How you doing?
Hello there. Hi. Thank you very much for having me. I've been watching your channel. I was one of your first subscribers. One of the first, I think, when we were trying to sort of add subscribers and do videos, and I remember we exchanged messages about a year ago now, and I've been watching your channel grow, and it's fantastic. Well done, and thank you for having me on.
Yeah, no, I think we first connected because I was watching your videos. I've been watching your videos for a long time, and I used to comment on your videos. And I don't think you realized at first that I was making videos, but I think after a number of comments that I'd made, you clicked on my name and sort of realized I had a YouTube channel. And then you got in touch, and then we sort of had a chat, and we said sometime in the future we're going to do a collaboration, and it's finally here.
Absolutely. Absolutely. Well, thank you for having me, and hopefully it'll be useful for your audience to get an idea of what's actually going on, because there's a lot of information out there, and ciphering through some of that stuff is going to be key. And I suppose that's why we've set up our channels, really, to get that information out there.
For anyone that doesn't know, Payam runs a YouTube channel talking about housing. It's a lot wider than the topics I cover. It covers subjects that I cover around sort of first time buyers and different schemes for first time buyers. But he also talks about buy to let and other sort of more niche topics, as his name suggests. For people that don't know about Payam or Niche Advice, can you just tell us a bit about you and your YouTube channel?
Of course. So we set up our business. My own background is I've been in the mortgage industry for the last 20 years. Very much started off in the corporate world, so dealing with the lenders and not really dealing with the public. And then when the last crash happened in 2008, I was working for a very large company then in central London, 400-500 staff, and we were doing 7-8 billion worth of mortgages. We had something like 3,000 mortgage brokers, a network of mortgage brokers. And the last crash happened, and that company went. And at that time, myself and my now current business partner, we shared an office together. And there were thousands and thousands of people being laid off, and there were, all these commotion. You had to turn on BBC, and it was about mortgages and how mortgage market was sort of going under. And myself and Richard Stokes, who's my business partner, we shared an office, and we said, well, what do you want to do? And I said, do you want to go and work for a bank? And he said, absolutely not. I said, well, let's go and let's set this company up. Let's try to see what we can do. Never dealt with the public. We always dealt with the banks in the past. And we set up in 2008. 2009 really started. And we started dealing with mortgages. So we've been mortgage brokers, regulated by the Financial Conduct Authority, whole of the market mortgage brokerage. And we set that business up very much from the start. We had no clients. There was no client bank. We've grown that organically over the years, very much by word of mouth and online. So whereas traditional mortgage brokers, they tend to tie up a lot with accountants, solicitors, and estate agents fundamentally, we decided against that, and we really wanted to just deal with, direct connection with the public. So very much online base, and basically our focus was at that time when we set up, a lot of the people couldn't go to the high street, or they couldn't get lending, and it was many reasons. It was to do with affordability, whether first time buyer, self-employed, buy to let, problems with credit, all sorts of things. So we said, well, we are niche advice because we will deal with that type of clientele. As things have moved on, everybody's become niche. Everybody's got an affordability issue. Everybody's got different types of schemes, help to buy, shared ownership, self-employment. All of those have now become mortgages. But so, niche advice, although our name is niche advice, I would say predominantly 80% of our business is probably standard, everyday business now. But yes, you're absolutely right. We do buy to let. We do sort of a lot of investment stuff in terms of bridging finance and different types of investment, HMO mortgages. But very much, our focus has always been dealing with individuals, whether it's a first-time buyer, next-time buyer, and be there for the long term.
So let's start off. Let's start off by talking about the Bank of England base rate. That we're recording this on Monday, the 1st of August, and the Bank of England is set to announce whether the base rate will increase again on Thursday around midday, I think. I think since December 2021, it's been rising consistently. What do you think the Bank of England? What do you think the Bank of England is going to announce on Thursday? And what do you reckon the impact is going to be for borrowers and mortgage rates?
Okay, so first of all, I've been recording videos for the last, I would say, year to say, look, guys, interest rates have got to go up. They're going up. They're going to go up. Now, I was a little bit wrong with my timing because I thought interest rates should go up sooner. Okay, I thought it would go up about 6 months sooner than what it's actually done. But we have had coronavirus, we've had Brexit, we've had all sorts of issues involved. So, and then now you've got the war as well. But I thought the interest rates should have gone up sooner. Why would I say that? Well, basically because of all the pressures that, we've been printing money. For all these years, we've been printing money, and interest rates were going to run away. Okay, there's a very interesting interview with Mervyn King, who's the old Bank of England governor, who was in charge when the last crash happened. And I think he did a Sky News interview, and it's very interesting. I think everybody should watch that. And it happened, I think, about 2 months ago. But fundamentally, what's happening is rates are going to go up. Next week, I will be shocked. I will be flabbergasted, right, if rates don't go up. Now, how much by? And the reason rates go up is we are a small country, although we've got a very strong economy, but everything's linked globally. Where does money come from? Well, money comes from Bank of England print money, but also institutional lenders. And a lot of those lenders are not actually UK based. They might be from, America. A lot of it's in the States. So what's happened in the States? If you look at the States, interest rates have been rising and they've been going up quite heavily. Okay, where we've been doing 0.25, they've been doing higher than that every time interest rates are going up. So that tells me, and also the European Union, they've raised interest rates. So tells me that although we've been going at 0.25, in my own opinion, and I could be proven wrong here, I think we're going to be in for a 0.5% interest rate rise next week.
Just to give a bit of background, the interest rate or the base rate's been rising by 0.25%. But you reckon this next increase?
We'll see. We'll see.
Yeah. Well, you know
what?
What
That do?
Yeah. Yeah, no, I think you might be right there, because I think when the committee voted last time, I think there was sort of a high number of voters that actually voted for a 0.5% rise. So so if that happens, it will take it from 1.25% to 1.75%.
Yeah, absolutely. And I think the issue is, look, although I don't look old enough, but I've had a mortgage at 5.5% interest rate. Okay, so when I bought my first place, it was 5.5% interest rate. Okay, so I have been through it. I've been through that sort of stage where interest rates were higher, but many people for the last 10, 15 years haven't gone through that. Okay, so they've seen interest rates up 1.5%, 1%, whatever it is, right? So it's a shock to the system, but it had to go up. I mean, they were dying to put the interest rates up before Brexit. Okay, they were waiting for the interest rates to go up before Brexit, and then Brexit happened, went the other way, and they've gone, right, we've got to keep it down because of the shock to the system. So, and I think where it should have gone sooner is now they will have to raise interest rates even higher. Okay, and I think we're in for the next year or two of interest rates rise. Funny enough, this August rise was predicted by one of the people at the bank that I dealt with about 4 months ago. They said, look, I think August we're going to get another big rate rise. Okay, so the banks sort of had a good idea around this beforehand. And what's happening right now? So, okay, so we think there's going to be a rate rise, whether it's going to be 0.25% or 0.5%, there's going to be a rate rise. What happens before a rate rise is the banks start withdrawing their products. So all this week, we've started having all those products withdrawn. So I know we're going to talk about loan to values and products, but so the big banks all of a sudden have started withdrawing their products. So what happens is it's a bit of mayhem in the market, because all of a sudden you've got people that are getting their documents to you to get an agreement in principle, and not many people are aware you don't actually book that rate until you've found the property and you submit an application. Okay, doesn't matter if you got your decision in principle. With I would say 99% of the lenders, it doesn't matter if you got an agreement in principle from the bank. Your rate does not get booked until a full mortgage application is submitted. So I might have got you an agreement in principle last month, 2 months ago. You're searching for your property. You're dealing with estate agents. You're showing them your agreement in principle. But until that's booked, that rate's not booked. So if the rate increases, what that does is not just you're going to pay a higher rate, but then all the affordability calculations that were done on that rate change. So all of a sudden, you may have been able to afford £200,000 loan, but now the rate's gone up, you might only be able to afford 185,000. So what that's doing is, and that's why it's important, and I'm not just saying this because I am a broker, I would say use a broker, because a broker have got, if they're a good brokerage, they've got access to the whole of the market. So you might go in with X lender at the beginning, but you might not end up with that lender, okay? Because things change, and this lender might have been very good on the rate and affordability, but they've now changed. So you've got to go from this lender to another lender because now they are the better lender for you. And that's what a good broker can do for you, because you give us the documentation and we'll be able to help you sort of navigate. Now, if you went to the bank direct, you're stuck with that bank. It doesn't matter what their rates are. They may come back to you and say, you can't afford to borrow this. And then you've got a decision to make, and you've gone all the way down this stage with one bank.
And just to add to that as well, like I don't know, people that go direct, I think they might use comparison sites, mortgage comparison sites. And from my own experience, I've sort of done my own searches, and I've contacted banks to sort of find out about sort of rates that I've seen on those websites. And the deals are not always the same as what is shown on the comparison site. Sometimes the fees are different, sometimes the rate's no longer available, and sometimes, the fees just end up being more expensive than...
Well, let me tell you something about comparison sites. Look, we've got a comparison site on our website, okay? The top product that I looked at, I was looking at a product for you, I think on Friday. You said we were going to have a chat. The top product that was coming up for the loan to value, whatever it was, 90% loan to value, that top product was no good. And I'll tell you why. Because that product is only for professionals only. So if you're an accountant, solicitor, doctor, pharmacist, then you can get that product and that rate. Otherwise, you can't. Now, it's in this small little wording in the disclaimer wording somewhere, okay? So that's a perfect example of why that product's no good, because it's only good for a certain amount of people, certain type of people. Also, this is so important. I would never focus on rate, okay, for a client. That's a bit of advice I would give you, because fundamentally, affordability and criteria is going to be really important. I'll give you an example. You might want to buy a new build property. A lot of the lenders, when it comes to new build flats, will restrict loan to values to 85% loan to value, okay? Now, a lot of those comparison sites don't actually get that information. Is it a new build or not? Okay, so you're getting all these quotes on these rates, but because it's a new build flat, they'll reduce it. You've got to put 15% deposit down rather than 10% deposit sometimes. So that's one way. You're just going to go down this route, fill in paperwork, get into the lender, and it's a wrong
you're not
thing
even eligible. And then even in addition to that as well, the cheapest rate is not necessarily, even if you are eligible for that rate or that product, it's not necessarily the cheapest product for you, because once you factored in the product fees and or the cashback that might not be clear or whatever, the actual cheapest product for your situation might actually have a higher rate than the cheapest rate that you're being shown as well, which I guess a mortgage broker can help you understand.
Absolutely. And also, how long do you want it? So, what we could do is say you wanted a 5-year fixed, okay? What we could do as mortgage brokers is actually work out the best rate, inclusive of all those product incentives, whether it's a free valuation, whether it's, I don't know, cashback, and compare that actually, adding the fees on or taking the fees, all of that for 60 months. Okay, so you'd say, look, never mind the higher rate or the higher fee, because lenders play games. They've got different products. Some of them have got a very low rate and a high fee. Others have got a high fee, a low rate. There's different things. So the systems that a lot of brokers use, is it will allow you to actually work out not only the best product, but also your eligibility, the criteria, affordability, type of property, so important, and also other things. So a lot of people, in regards to where are you getting your deposit money from? Well, there's a whole load of criteria around that. If it's going to be a gift, who's going to give you that property? Who's going to give you that deposit? All of those things, lenders have got a criteria on, okay? And that's where a broker comes into its own, because the broker will know from experience and from the systems that we use what's available for you.
So having said all of that, I now want us to have a look at mortgage rates. I know we just said that, having a look at the cheapest rates is not necessarily the most helpful thing to do, but I want us to have a look at sort of the mortgage rates that are currently on offer, just to see what the general trend is in the market. And what I want to do is firstly put on screen the rates that I showed at my last update video from June 2022, which was just before the last Bank of England announcement. And the rate between 90% loan to value and 60% loan to value for 2-year fixed rates and 5-year fixed rates are sort of just over 2.5%. And there isn't much of a difference between the 90% loan to value rates and the 60% loan to value rates. I think although interest rates have increased across the board, I think what we saw here was that it's the lower loan to values, the people that usually have bigger deposits, that have been hit harder, because those rates have risen a lot more than
It's really weird.
Yeah.
It's a really, really strange thing that's happening right now. If you came to me, in fact, I was writing mortgages last year, 5-year fixes, okay, for people that had 40% deposit or more, and I was getting sub 1% rate. Okay, I've got clients right now that are sitting on 5-year fixes that I did a mortgage for them last year, sub 1%. Okay, so that's great. So people that had a lot of deposit were actually being rewarded a lot with the rate. Looking at these, it's just mind-boggling, because you've got not that much difference between someone who's got 40, 50, 60, 70, 80% deposit and someone who's got 10.
I know. It's crazy.
And obviously the rates are there for you guys to have a look at. It. You'll put it on the screen. But what that's doing to the market is basically the way the money markets work and the way the lenders are funded, okay? It basically says the lenders don't know where the rates are going to go, right? They don't know where it's going to stop. So they're hedging their bets. They're not coming in with very competitive rates, because they don't know that was a very competitive rate then, but they don't know where it's going to come up. So what you're finding is that, a 60% loan to value and a 95% loan to value, they're both in the threes.
Yeah, so let's pull up the rates that you found for us today. So August 2022 now. So we were saying before, sort of 90% to 60% loan to value, the rates were 2.5+%. Now we're looking at just under 3.5%. So and yeah, there isn't much. There's like 0.1 difference between a 90% loan to value mortgage and a 60% loan to value mortgage. And one interesting thing here, which I think you just alluded to, or you've probably given the reason for why this is that although during this period the rate's only gone up by 0.25%, these rates are around 0.6, 0.7 higher than they were six weeks ago. So, like, I think that explains maybe what you said about lenders hedging their bets. So they're raising their interest rates more than the Bank of England base rates going up, because they can see that it's going to continue to rise. So they're not just raising it by
No, they're
0.25%,
not. They're
they're raising
covering
it by more.
themselves.
Yeah.
They're playing musical chairs. I'll tell you what happens, right? They're playing musical chairs. So you have a lender who's got very good rates, okay, for about a week. What happens is they get flooded with business, and then all of a sudden their service goes pop, and then their application is taking so long, they're having to withdraw that rate and come out with a higher rate. And then another lender gets at the top, and that lender gets load of business, and then they have to withdraw the rate. So it's a musical chair right now, because these lenders are uncertain about giving very competitive rates, and they don't want to do huge amounts of volume on that rate, okay? Because they don't know. Right now, we may look at it and go, right, last year it was, last couple of months ago, it was 2.55, and now it's 3.29, or it was, I don't know, 3.35 at 95% is now 3.79. Not that much difference. We may think this is a bad rate, but a year's time, this might be a very good rate still, because no one knows where the interest rates are going to go. And honest to God, I don't know where interest rates are going to go. And that's going to have an impact on everybody. Right. So what's happening with the market? The market right now is there's not enough stock in the market. The problem with the current market that we've got, and that's why no matter what the rates are, people are still looking to buy. There's not enough good properties that people genuinely want to buy are in the market. Okay, so you've got two types of people that are selling right now. You've got the chances who say, well, I bought my property for 200,000, it's now worth 600,000. Let me see if I can buy it for 700,000. I put it on the market for 700,000. If I get an offer, I'll sell it. If I don't, I don't. So there's those type of people that are selling their property. So they're chancing it. They're saying, right, if I get this, I'll sell. Okay.
Cashing in.
Yeah, cashing in. Then you've got the other type of properties, because properties that are they're having to be sold because they're not great properties. Now they've got maybe structural issues, or maybe they've got a lot of renovation that needs to be done. So you've got those type of properties. Right now, no one's really selling out of desperation. Okay, that market's not there yet, where people are having to sell. Okay, now I believe in the next year to 2 years, I think you're going to get that market. It was always there. That was always part of the property market. It's not new. I'm not saying there's going to be a crash. I'm just saying that part of the market hasn't been around for the last couple of years, because everybody's bought properties and thought, well, I bought it for this. It's now X amount of property money's gone on there. I don't need to sell. There will be people that will lose their jobs, or affordability starts affecting them, or they may have to move in with parents and family, downsize. You're going to get that. Once that comes in, properties are going to be more accessible. Right now, it's a false market, and it will come back. I think that part of the market will come back.
Yeah, so I guess that will affect property prices, because at the moment, although we're seeing a number of shocks to the market, interest rates are rising, there's a lot of uncertainty in the market. Property prices don't seem like they're falling. But do you think
because of the stock? The problem is because of that stock. I've got clients. Literally, I've got a good friend of mine. I wanted to buy in West London, and I'm doing his mortgage for him. Honestly, I must have run quotes for him 6 times on different properties, agreement and principles and so forth. And he's saying, look, Payam, I'm going in with a property. Say the property's for X amount. It's going up £30,000 over the asking price, right? He said, right, we get an agreement in principle at the asking price. And he goes, there are people, going 30, 40K over the asking price. So that still hasn't kicked in. Now, I think the property market will slow down, but I don't think it's going to be a crash because there's not enough stock.
So
Okay,
you don't even think there'll be a dip. You just think it will just level off. So where prices, it'll be more like prices don't change, or they increase very slowly, more than a
I
dip.
think there will be more stock, so
Okay.
you'll get more for your money.
Okay.
Okay, I don't think you've got clients. I deal with all sorts of people. I deal with the people that make an inquiry to me and go, well, do you know what? I'll wait another year because I think the market's going to come down and stuff. I've got people that did that 8 years ago, and they're still on my database. They're still on my database,
Oh
right?
wow. Yeah.
They're saying, 9 years ago we had a chat with them. I'll wait until the market sort of. So you've always got different types of people. In my opinion, look, there's always, if you're going to buy property to live in, and I think majority of your audience are residential
Buyers.
people that want to buy residential. If you're going to buy a property to live in, time in the market's going to be really weird because you just can't time it, right? You buy a good property in a good area, you're going to sit there for 5 years, 10 years, 20 years, right? So it's better than paying rent.
Yeah, I agree with you there. I agree with that. I think people are too, and I think I was this way as well. People are too bent on like trying to wait for the market to crash and then sort of taking advantage of that. But like it's like investing. They say it's not about time in the market. It's about time in the market. So if you see something that you like, you can afford, you can live in for at least 5 years, ideally at least 10 years. You can grow into it. Then if you own that property, especially sort of in the southeast around London, if you own that property for 10 years, even if you overpay initially, you can afford it. It's not going to sort of, make you struggle financially. Eventually, that's going to work out most likely to be a decent investment. It's very unlikely you're going to lose money on that property. And I think what's more important is whether you can afford that property and whether it's a good property for you, if something you can grow into. Because you don't want to be buying a property that works for you just now. You're a young married couple, you're in I don't know, studio or one bed, but you plan on having 2, 3 children and are quickly going to outgrow that property. You need to think about the future and potentially living in that home for at least 5 years. But yeah, as I said, ideally 10 years.
Yeah, I think that the key bit is are you comfortable with the costs? People often say to me, but I'm paying rent right now. My rent is X amount. I go, well, that's fine. If you don't pay your rent, they'll kick you out or whatever, you leave. But the reality is, if you don't pay your mortgage, there are more serious consequences, okay? Just because you've been paying your rent for the last few years doesn't mean that you can pay your mortgage for the next 25 years. And people forget. People always think, and I did the same when I was younger, people always think, well, I'm earning good money now. Okay, well, what about in 15 years' time? Are you going to be earning the same money in 15 years' time? Do you know what's happened in the last 15 years? YouTube has been invented in the last 15 years. Things have been,
Instagram.
Jobs have changed. We didn't have Uber, we didn't have electric cars. What's going to change? So it's so important people see this as a long-term commitment, okay? Because a mortgage is a commitment, and you're taking this just because you can afford it right now doesn't necessarily mean you can afford it in the future. So don't overstretch yourself. In the same tone, if you look back at the 2008, the big crash, and it was everywhere, what happened to the property prices? Yeah, they dipped 5% or 7% or something like that, and they came right back after about a year, okay? Because we're a country that we haven't built enough properties, decent properties, for many, many years. There's a £300,000 shortfall, 300,000 property shortfall every year. So we're not building enough, okay? So there's always going to be demand. We've got lots of people that have come into the country since then as well. You've got a lot of change happening to London. No, look at London, okay? If you look at central London and the money that's come into central London in the last 10 years. So what's happened? Those people have now gone outside of London. The people that lived in Hammersmith have now gone a little bit further out. The people that lived in further out have now gone into Surrey. And that's sort of that wave and that's because we're a global country. Okay. So no matter what you're dealing with, I've got clients that I'm doing a mortgage at the moment for a £5.5 million property. Okay. The client's not competing with you, me, and everybody else here. He's competing with every other rich person globally that wants to buy a property in London. Okay. So that demand is always going to be there. That demand is always there.
So just touching on affordability, you were talking about the fact that it's important that people are able to afford their property long term, not just now. And you were talking about as well, with uh, interest rates for mortgages increasing, it's affecting buyers' affordability. But
Yeah,
the government, not the government, sorry, the Bank of England recently announced that they are removing the stress test requirement for
yeah.
borrowers, which should make it easier for borrowers to get mortgages. And this comes into force today, Monday, the 1st of August. But with everything that you said, I don't know how much benefit this is going to be. It feels like things are
It's
already
for the
moving in
headlines.
the
Let
yeah,
me tell
yeah.
you what
So
it is.
yeah,
It's for the
tell us,
headlines,
yeah,
right? It's for the headline. Let me tell you the
yeah.
truth,
Go ahead.
right? No, basically, right, the government, the Bank of England used to have this test, which basically said whatever the rate is, add another 3% on top. Okay, so if you're going to pay 3% interest rate, they should stress test it as if it was 6%, and is it still affordable at 6%? The issue is that was one of the rules they set out. Then there was another rule that said, income multiples, shouldn't be over X amount, 4.5% or 4.5 times the income multiples. And there were lenders that could do 5 times in certain scenarios. So they had a whole host of rules, but that was one of the rules, and that's the one that's been scrapped. But interesting enough, the lenders always ran their own affordability rules anyway. Okay, so different lenders have got different affordability rules. Different lenders will treat you having kids differently, having student loans differently, having lower income, higher income, commission, bonus, overtime. They all treat it differently on their affordability calculations, benefits income, all child benefit. So let me just turn this. So basically, that's all still there. And I read an article today, actually, in the press, which basically said majority of the lenders, the top lenders, are not doing anything about it. They're not changing anything. Because what they don't want to do, I told you, it's about musical chairs. They don't want to be the first lender who comes out and says, right, guys, we're now going to lend X amount. You now can borrow a lot more. So I think they're going to be cautious initially. Nothing has really changed. I haven't seen anyone come out and say, right, we can now lend this. Okay. I think it will happen behind the scenes, slowly. I think the reason that's happened is because we were talking about 1% interest rate last year. So if you stress test that, it would be 4%. Okay. If you start stress testing someone now at a 3.35 and you put another 3% on top, that means they have to have affordability at 6.35%, and that's someone with 3.35. If they're self-employed or if they've got some sort of credit issues and stuff, you're looking at rates of 5-6% right now. Right now, I'm doing rates, some people at 4.5, 5%. You stress test that by another 3%, you might as well pack up.
So
There's no point.
so more than trying to improve the situation, it's more of a band-aid not to make the situation worse.
Worse, yeah. So what you will find is that if there's going to be any improvements, it will happen gradually. It's not going to be a sort of right from today you can now borrow this. It's going to be a gradual thing. I think the Bank of England obviously knows that there's going to be movement in interest rates, and they don't want to make things worse. So I think that's probably one of the things they've done. And I think we will see. But looking at what's out of some of the major lenders, they're not looking to tweak things right now. That may be a change later. And also, we've got another problem, which is the cost of living. You've got utility bills. All of a sudden, all of that information, you see, a lot of the banks, when they're running an affordability check, they use the Office of National Statistics data. So they use that. So all of a sudden, your utility bills are now doubled or tripled. Well, that's going to be taken into account when you're doing affordability. Wait until October, they reckon rates are again, bills are going to go up. So it's a perfect storm, really. It's happening. But what is this doing? There's going to be opportunities, like I said, just like there's going to be people that are looking to sell, more people, which means more stock. And I still believe there are plenty of people who are looking to buy. We are still really busy as a business. It hasn't stopped, and that we're not different from any other brokers. I think we're still busy.
We were just talking as well about the Bank of England's announcement that they're removing the stress test from mortgage lenders' lending criteria, and how that probably isn't as great as it initially seems. But there was another announcement by UK Finance recently about 6 of the UK's biggest lenders agreeing to actually lend money on buildings affected by the cladding crisis. Now, can
In
you just,
principle.
yeah,
In
can
principle, right? Okay.
can you just explain a
Another
bit
one.
of background about this situation? Because some of the people that watch my channel will be aware of it because I've covered the cladding crisis, but also talk about what this means for these flat owners that are affected by the crisis as well.
Well, we have been over the years one of the biggest and one of my, I suppose, niches in the market has been the right to buy. We've been doing lots and lots of right to buy mortgages. I see myself as probably one of those experts in the right to buy arena because I've done so many right to buy mortgages over the years. And the right to buy is obviously you buying your council home. Now, we've come across, after the Grenfell situation, these cladding materials that were put in a lot of ex-local authority, but a lot of new builds, okay, had cladding. So what's happened is the lenders are now refused to lend on anything that didn't have an EWS1 form. So basically cladding that's been approved, okay? So you've got all these people that have bought mortgages, they've got mortgages or are looking to get mortgages. So you bought property. I had a client bought a property for £600,000, okay? Couldn't remortgage. They could do a product transfer with the same lender, but they couldn't take this mortgage to another mortgage, which means they wanted to buy a house. They bought a flat. They wanted to, remortgage that one and then buy a house. They couldn't. So you've got thousands of people that are sitting there. They can't refinance. And bear in mind, they're paying their mortgages. They've done nothing wrong. They got a survey. They did everything the right way, right? But you've got these builders. So there's been a problem. There's been a back and forth between the government, the builders, and the leaseholders and the freeholders and the people that are poor people that have bought these properties, all fighting it out to see who's going to pay for all of this, because it's costing hundreds and millions, okay, billions, okay, it's costing. So this is in principle, 6 lenders have said, look, as long as there are certain conditions, we will lend on these properties, okay. However, this hasn't been finalized yet. The new housing secretary, and we've had about 15 of these people that come and go, right? And it's a bit of a joke because they come out and they all talk about a good thing and we're going to do this. They never do. It's a stepping stone to something else, within the government. It just gets them in the door. So what's happened now? The government have actually said, the new housing secretary has said, look, we're committed to doing this. We want to do this, and in principle, we've got this agreement. We want to get this draft out as soon as possible so we can make this happen. But I still think there's going to be a lot of problems because there's a big hole in that market. And whatever the government's putting aside, and the government's putting some money aside, the builders, house builders, the top house builders are saying they're going to contribute towards this. But it's small fry. I think there's still going to be some, turbulent ahead because there's just too much of a hole there and someone's going to pay for it. And the government's trying to sort of pay some of it. The developers are trying to pay some of it, and I think it's just going to be a lawyer's game for a little.
Yeah, that's the thing. So, like the announcement, I think we're still waiting for more details on how it's actually going to work. But it was talking about that these lenders may potentially lend on properties where either the developers agreed to pay for the remedial work for the cladding
before it
issue.
gets done.
Yeah, before it gets
so as long
done.
as they've got a reputable builder who
Mhm.
says they're going to do this,
Yeah.
okay.
Or the government
we know
that
it
said they're
needs
going to
work
finance
doing.
it.
Exactly. We know it needs doing. This is what it needs doing. We know what it needs doing, but it's going to take us a year to do it or 2 years to do it. There's going to be a tentative agreement that these guys are going to lend on them. But like I said, I don't think it's going to cover everything. And what about all these other builders? So the proof is in the, all of this stuff is all about detail. Unfortunately, we live in a world. What happened to Boris's right to buy promise? I wonder what happened to that. What you've got is you've got press releases, and then you've got people that are actually dealing with it, or people that are living in that situation. And if you speak to some of those leaseholders that are, that are living in cladding, they will tell you that, they've seen a lot, heard a lot, but not much has been done. I hope there's going to be some progress on this, because there's a lot of problems within that area. And lenders, I'll tell you this now, the government have come out and said, oh yeah, if it's under 15 story, you can do this, you can do that. The lenders don't care. The lenders are saying, look, we're not taking that risk. Why should we? Okay, why should we lend? If one lender's got the risk, let them keep it. Okay, so unless there is some concrete, documented stuff that's put in there, the lenders are just going to say, no, thank you. Why would I want to take that risk on?
Yeah, and just to add to that, I think the government has said that they're going to cover the replacement of cladding, but I think there are a lot of other issues in these buildings that the government's not covering. So like cavity wall barriers, so issues where there's nothing to stop the spread of fire within a building.
Yeah.
And even with the covering the cost of the cladding, I think it's only covering the cost of removal, and I think the new clad, there are gaps in the funding.
There's so
So
much. There's so
it
much
looks
more.
like there's so many loopholes that lenders can jump through to avoid lending on these properties. I guess it may people that are in properties where the developer said that they're going to cover all of the issues and it's in writing, and it's just they've got a date sometime in the future where they're going to address it. They may be in the best situation to take advantage of this change, but even
Time
then
will
it's
tell.
the devil's in the detail, as you said.
Yeah, time will tell, and I think the lenders will give us a steer, and the RIC surveyors will give us a steer. The surveyors will give us a steer on it, and you will start seeing improvements. But I think I don't think it's going to come in anytime soon. I know the government say they want to do it, and I know the builders have signed up to it, but they've got to cover quite a lot of this stuff off, because otherwise it's just going to be it's just going to go through the courts. And it's unfortunate, but unfortunately we live in the world right now that it's all about press releases. You release something and then you worry about it later, and you leave it to someone else to deal with it. And that's what every single housing minister has done for the last 15 years. They've announced, oh, we're going to build all these houses. How are you going to do it? Oh, well, we'll let the next person deal with it.
Yeah, it sounds very much like Boris Johnson's announcement of right to buy,
Yeah, Boris
and
Johnson's announcement.
David Cameron's announcement before that about right to
Yeah,
buy, and every
I
other
know.
time it's been raised. But yeah, no, I agree with you. But before we go, I
Yeah.
just wanted to see if you had any other tips for sort of first time buyers, people moving from one home to another, or remortgages. Just based on the current mortgage market, any sort of tips or any observations that you've noticed that we
Yeah.
haven't sort of covered?
Yeah, I think what you need to understand is right now is do your research, get your credit report, okay, beforehand. Know what you've got. Have a look at the property values. Get an idea of what you're going to buy. What's your maximum? Speak to others to see if you can help with the deposit. Family members and so forth. Have that discussion beforehand. Okay, what are your limits? What can you can't go beyond? All of those things. Preparation is going to be key. Get your bank statements right. Get your pay slips sorted out. If you're self-employed, get your tax returns for the last 2 years sorted out. Have a word with your accountant if you're going to file your tax. Okay, all of those things are vital. Okay, when you're starting to get a mortgage. If you're looking to get, if it's a remortgage, you've got a couple of months. If 3-6 months beforehand, start having this dialogue. Do your research online as well as speak to a good broker, because all of those things. Look at property types, okay? If you're looking to do council right to buy, for example, if you're looking at shared ownership, staircasing, look at things that are, how many people are bought in that block? Okay, do a little bit of research, right? Because all of those things matter. But fundamentally, get organized, guys. Unfortunately, I still see so many people, I speak to people that are just not organized. They're not ready, okay? And you almost have to educate them into, look, this is the doc. Why do they need to see this? Well, they need to see this because of this and because of that. So, just because you can, like I said, just because you can pay your rent right now, doesn't mean you can get a mortgage, okay? And if you're informed, if you know you've got credit problems, then we can do something about it. There's a plan, okay? If you know your deposit's short, there's something we can do. We can plan for it. If you know you're going to get a pay rise, we can plan for that. If you know you've got high costs, you've got student loans, there's a plan. So the key is know what you've got and then approach an expert so you can plan for it. Okay. The worst thing what you want to do is, get in there and say, oh no, I've seen a property. Can I get it now? And no, you haven't got your paperwork. You haven't got your agreement in principle. We haven't planned where we're going to go. So it's really, preparation is going to be key. If you're going to win that property, for every person that wins a property, that buys a property, there are probably 15 to 20 people that don't. Okay. So you're going to be one of those 15 to 20 people a lot of the times. But it means then you will learn to be more organized and be ready for that when you see that property.
Be prepared. Be prepared with your paperwork. But also, I think something you've touched on a couple of times sort of during our chat is the fact that this is an invasive process. Like, you're gonna. People don't like. We're British. We don't like talking about our finances. We don't. Even telling your colleague how much you earn is a bit of a. People just are not comfortable talking about it. But you're gonna have to, if you want this to go smoothly, if you want the process to go smoothly, you're gonna have to bear it all out. You're gonna have to show your finances. You're gonna have to be honest, because it will come out later.
Let me tell you a couple of funny things.
Yeah.
So last week I had a client who was married, right? On the application form, have you got any children? None. Bank statement showing child benefit for 2, right? So things like that. Disclose everything, first of all, right? But secondly, I had a client today, made an inquiry on our website, came in, I had a discussion with him. So he said, I said, there was 2 bits missing. It was his date of birth was missing on his form and his income was missing. So we had this chat, really good chat, really pleasant guy. I think I could help him. So I said, great, I just need to do a quote for you. I can see there's 2 things missing, right? Your date of birth is missing and also your income is missing. He goes, I'm not comfortable with giving that information. And I said, well, hang on, you contacted me. I didn't call you. You contacted me. You want me to give you a mortgage. But if I don't know your date of birth, how do I know how many years you want the mortgage for? Does it fit? If you want a mortgage for 30 years and you're 60 years old, it means you're going into retirement, you can't get a mortgage. He said, well, I'm not comfortable giving that information. If you're one of those people, then using a mortgage broker is probably not the right thing, because we're going to ask for bank statements, pay slips, all sorts of proof of deposit, saving statements, let alone your date of birth and your income.
So just on that, Payam, like we're saying that people need to be open and give all the information that's needed in order to make this whole process work. But what should people be doing? What questions should people be asking to make sure they're not dealing with a rogue? Like, to make sure that I mean, it's all well and good, they're contacting you, they've seen your details or whatever, but what accreditations or what details should they be asking
absolutely.
for? How can they protect themselves to make sure that their details don't end up with some fraud stuff?
Okay. So there's a couple of things people that are looking at properties should really look at. The first thing is, look at the business that research the business that you're looking to approach. Find out their charging structure. Most of them should have it on their website. Find out if they're whole of the market or if they work for a panel. Not all brokers are whole of the market. A lot of them work on a smaller panel. Find out, look at their reviews, look at their site, look what they're about. Speak to the broker, see if you get a good vibe off them. At the end of the day, you're going to be working with this person, and this person, it's a long term. It's not about a day. You're probably months of conversations often you're going to have with these people. Find out whether they charge up front, whether there's an administration fee, whether there's, how much do they charge in terms of various ways. What I would also say is, look, a lot of, certainly when you're dealing with estate agents and developers, a lot of them push clients to their own brokers. So they'll say, oh yeah, you need to use our broker. Especially if it's estate agents, the broker's sitting there and the estate agent's sitting there. Well, do you really want the person who's going to get your finance knowing the people you're buying from, knowing all your finances? Do you really? I mean, if you're talking about rogue, that's one of the process. They should not. Nobody should force you to use a broker. Okay, but it does happen. You know, a lot of those new build developers, they've got tie-ups with things. They're pushing people to go to certain brokers. Now, you don't know what information is shared, so be comfortable with it. You know, you don't have to use. You don't be pushed around by anybody. Don't, you know, if you don't get a good vibe of somebody, walk away from them. There are plenty of brokers. All you have to put is mortgage broker on Google, and there'll be lots of them. There's lots of brokers out there. So yeah, just be, you know, don't be bullied into using a service and think there is no other options. There's always options out there. It's who you feel comfortable with.
Thank you for that, Payam. I think that brings us. I've held you here for long enough. I could hear your phone buzzing as well. So let me
No problem, my friend.
let you go. Thank you so much for having this chat with me. And for those that are watching this,
Hopefully you found it
yeah,
useful.
hopefully you found it useful. If you did, make sure you give this video a like, and make sure you check out Payam's video of Payam's YouTube channel, Niche Advice. I'll link to it in the description of this video. But yeah, also I'll probably just put a screenshot of it on the screen so you know which channel it is. But yeah, no, thank you again for watching this video. And if you enjoyed it, give the video a like, and I'll see you in the next one. Take care. Bye.